What's going on, everyone? Let's do a little technical analysis breakdown on AMC. I notice a lot of you guys talking about this on Stock Twits and on Twitter, and I'm seeing, a little bit of a chirping going on social media. So I kind of want to dive in and let's get a little technical look here at the chart and kind of see what's going on. Obviously, we know if you're a long-term holder, AMC is not where you want it to be. But that's just the name of the game. Stocks are going to go up, stocks are going to go down, whether it is manipulation or whether it is, whatever the story, the narrative is out there. At the end of the day, the bigger picture is a lot of growth stocks, a lot of speculation plays, a lot of small cap stocks have really been beaten down. So it's not just AMC, it's not just GME, it's not just some of the big ones. It's a lot of the stocks that had these big run-ups in 2021, the beginning of 2021. A lot of these stocks that had huge growth in the end of 2022. Have all been taking a back seat, and now it looks like that's starting to trickle over to, the NASDAQ 100 stocks, some of the major mega cap stocks like Tesla starting to get hit. Amazon really has been trending down for a few weeks now. Shopify has taken like a 600-point blow. So when you look at the big picture, when you're looking at AMC and you're like, oh, it's down, it should be higher, it should be this and that. If you just look at AMC going back, this is the weekly chart here, 1, 2, 3, 4, 5, 6, 7, 8 weeks. If we go back 2 months here, AMC is from $44 all the way down to $22. So it's lost about $22, $20 in the last couple of months. You look at something like Shopify in the last 2 weeks has lost, close to $500. So, it's not just AMC, but with that being said, here's the level that really needs to be watched on AMC. So according to the weekly chart, this first initial run up, this January 25th run up, everybody remembers this. This was a time, stocks got halted, Robinhood, the whole Robinhood affair, all this and that and the other. This was the initial run up here. This initial wick came out to about a price of $20.78. That so far has acted as a level of resistance in the past, and has also acted as a level of support 2 times. First time going back to December 13th, and the second time going back to this week that we're currently in here. So if we really take a look at that, AMC is really going to need to hold this $20 level. I could see it maybe cracking a little bit below, coming down into this $18 range short term. But I think it's going to be able to find some support there. This is just going to be a long-term game here. If you believe on what AMC is doing, you believe in the company, you believe in the fundamentals, you believe in what they have as a company going forward, then this should be fine. Average down on your position, no need to worry. This is, I would highly doubt that this is coming back to $5, $6, $7, or $8. There's just too many people piled in this stock for it to actually go down that much. Now, as far as we talking about manipulation and the hedge funds and the suits and them and they holding everyone down, guys, it's not as complex as everyone is making it out to be. So whether the data numbers are fudged, whether the data numbers are skewed, you can take a look at a number of different stocks and you will find discrepancies in the short interest data. You'll find discrepancies in, shares being reported synthetic or short or this, that, and the other. It's the name of the game. This pump here is unreal. This is not natural. Okay. So what I want to get clear, and kind of put in perspective is this is not natural. So if you are someone who's holding this stock and you're looking for the stock to come back up, do you believe that it should just be putting in these type of weeks, over and over and over and over again? I mean, where would the stock go? The stock's going to go to 1,000, 2,000, 3,000. I mean, we have to be realistic, as far as the stock. Now, mind you, I think the stock can definitely come back 45. I think it can come back, test all-time highs here, 72 down the road, definitely. But, is it going to happen all at once? No. I know you guys have felt a lot of pain, especially people who have been holding this stock. If you've been day trading it, there's been some opportunities to make money on the short side. I know a lot of people don't like to hear that, but, as a trader, you have to be able to take advantage of both sides of the market. We were blessed with 2 eyes, 2 ears, 2 hands, and the ability to trade long and short. So, you don't always have to hold your position. And even if you are holding a long position, there's no harm in hedging that with put options to the downside until this kind of stabilizes itself out and then starts to come up. But if we want to look at it from a bigger picture, what AMC really needs to do technically here, we really got to get back over this 50-day moving average. That price is going to be $28.28. I think that once we can get back over that $28 and $28 and some change, I think we could start to change the narrative and start to change the trend here. You can see here we are forming this a little bit of a double bottom, put in a higher high today. I would expect to see some sort of bounce. The first price that we're going to need to get over is clearing out the 5-day moving average. You can see that we came up to the 5-day moving average today and we're rejected off this level. So if I kind of bring up this chart a little bit so we can see it better, this 5-day moving average here was rejected today. So if we can get a close over $24 and let's say 34 cents, our next price target on the stock short term is going to be 26, and then that next big level is going to be reclaiming the supply of the 20 moving average, and that price is going to be around $27. I think as soon as AMC starts to clear out this $27, it's going to have an initial spurt up to 30, 31, and then the same old song and dance. We've got a lot of resistance here in the 32s, a lot of resistance here in the 33s. You can just see each of these lines here is a line of resistance. This is all supply zones. AMC is really going to need to, chop around and kind of, come this way and then come back down and then come up here and then come back test. And then it could have a nice little run here and then maybe some follow through and then sideways consolidation, come up again and then get rejected, come back down to test. This is healthy and this is what the stock should look like. Okay. And it can entirely do that. But you can see this is not going to happen overnight. This is going to take multiple days, if not multiple months, with some serious catalyst behind it, and good fundamentals and good earnings and good quarters and this, that, and the other to actually push this stock up. And I just kind of feel like a lot of people just want to see the stock do this. It's not going to happen in one day. Now, I think the times of the stocks doing this, the GMEs and the AMCs and, everything else that's run, that massive run that Fubu had, that massive run that Wish had, the massive run that a lot of these meme stocks had, where everyone was just so used to things going straight up like this, you kind of get discouraged when you see price action that looks something like this. There's nothing wrong with this price action. You just need to remain patient and you need to remain calm, and do your correct, technical analysis and due diligence, maybe, averaging down your positions here. This is a double bottom. This looks like a great area to actually average down into your position. If we kind of zoom out a little bit here on the daily chart and kind of see a little bit of a bigger picture, possibly see, just going back, I mean, it looks like this area down here looks like a fantastic area to average down. You would have to imagine that if AMC starts to lose the $20 level, that it's going to see significant selling pressure to the downside, just due to the fact that there's not too much support down below 18. Nothing below 18. And then if we really look at it, right, like, so if I zoom out here and kind of go back a little bit, this $20 level is where we're at here. If we were to lose the $20 level, you can see, we do have a gap to be filled here at around 16, anywhere between $15 and $16. So, the whole big idea here is to hold this $20 level. So today we did close a little bit higher than yesterday. We kind of closed right at yesterday's, high price here on the closed candle, $22.99. I know a lot of people are upset about the way that it closed. A lot of people feel that we closed over this $22.99, but hey, it is what it is. The bigger picture of things is we did not clear out supply. The supply is the 5-day moving average. That's the shortest term sentiment. This is going to tell you who has control going into the next trading day, the 5-day moving average. If we are closed below, the bears still have control. If we are closed above, the bulls have regained control. Right now, the bulls need to regain control. So if you do believe in a stock, keep continuing to buy, keep, continuing to hold. There's no need to sit here and pout about it and, get down on yourself. It is the way that it is. Take a look at the IWM. This is a small caps. This is not just AMC. This is like everything else. I mean, look at the trading range that the small caps have really been in, up, down, up, down, up, down, up, down, really not going anywhere. So, this is a whole year's worth of trading time. We are pretty much flat. Yes, we kind of came up and down, but realistically, you know, we didn't go up and we didn't go down. We just kind of traded around sideways. So what really happened to a lot of these stocks in the small cap world, you know, they really got hit. Take a look at, you know, something like Fubu, right? You know, big, massive run up, then all the way down. Okay. Big, massive run up, then all the way down. Pull up the weekly chart here on Fubu. Let me kind of zoom in a little bit. So we have this big, massive run up, you know, almost the same time as the AMCs and GMEs of the world. And then came all the way crashing down. And then we've just been trading sideways. And then here we are back down at the bottom of the range. We look at something like Wish. This was a stock that was heavily traded by retail traders. Big, massive pump here all the way to 32. And this stock is trading at $2.50. We look at a stock like SoFi. You know, this stock has had its waves, but it's, you know, big, massive pump, then all the way back down, and big, massive pump, then all the way back down, and big, massive pump, then all the way back down. You know, a stock like Skills, also the same thing. You're noticing the same narrative, big, massive pump, then all the way back down. These are all the same type of plays. Even stocks like, you know, DraftKings, I think, which is going to be a leader in the gambling space in the coming years, you know, big, massive run up all the way to 74 and then all the way crashing down. So if you think the AMC has had it hard, you know, so has DraftKings. DraftKings hit a high of 74. AMC, I believe, hit 74 as well. You know, and here's DraftKings down, came to lows all the way of $23, and so has AMC. So it's the same chart patterns all the way around in the small cap world. You know, even if you get into some of the tech stocks, you know, look at a stock like Twitter. Right? Look at a stock like Twitter. I know it's had its bad shake. A lot of people don't like the CEO or ex-CEO, whatever, this, that, Jack Dorsey. But if we take a look here, run all the way up to 80 and then crashing all the way down to 39. So, you know, stock like Snapchat even, right? This has nothing to do with any kind of pump. This has nothing to do with any kind of short squeeze. But if we take a look at what it's done over the past, if we really get into that 2021 area, you know, big, massive run up from this area here, where the stock price was between $40 and $51 and all the way up to 83 and then all the way back down to 39. So I hope you guys kind of get the idea. It's not just, you know, AMC. It's not just GameStop. There's a lot of stocks that are really beaten down. And, you know, if you even take a stock like Amazon, right? One of the big dogs of the world. This stock has pretty much been trading inside of a range all year. Yes, it's sloping up a little bit, but if we really talk about where Amazon has gone from November 19th all the way to current day, we were trading at a high of $3,750 all the way to lows of $3,200. That we have also lost 500 points in the last 2 months on Amazon. So be patient, guys. It's a very, very volatile market. It's a very, very choppy market. Very, very tough to navigate. I hope you guys all stay safe out there. Kind of mark out your levels. Right now is a trader's market. It's not really a market for a lot of swing traders. Not really a market for the investors. Not saying that you shouldn't be investing into the market, because obviously when there's fear, when there's pain, when stocks are dipping, this is a time to really build your portfolio and grab those cheap shares. But what I'm saying is, while they remain cheap, don't complain. Okay. Everybody wants a great entry on the stock, but everyone also wants to complain when the stock doesn't go up right after you buy it. I hope that makes sense, guys. And I will see you guys all in the next video.